So as a passive investor, you want to look into like what's my return on my money, right?
Yeah.
So if you're because as a passive investor, you're putting in your money and your money is going to go off and come back with friends.
All right, guys. So my name is Julian Castle, and I'm a partner in the Real Estate Investors Group. Today I have Monick, and Monick is a real estate investor, and she's going to be telling us about her journey. She's, had bought apartments, and she's focusing now on industrial. She has a very interesting journey from house hacking, and so we're going to go into it. And I'm very excited to have her on. So Monick, welcome. Thank you so much for coming on.
Thanks for having me, Julian.
Thank you so much. So Monick, I know that you got into real estate accidentally. For the folks that don't know the story, could you give a brief, storyline on that? And of course, we'll get into how everything has progressed, but and what you're doing now. But it'll just be great just to get people who are fresh, to real estate, just to kind of put themselves in your shoes.
Sure, happy to share. Before we started rolling, you were telling me a little bit about your story and that your dad is in real estate, and that's what got you into it. So my parents were not at all in real estate. So the only
Yeah.
thing I ever knew about real estate investing, I knew nothing about real estate investing. The only thing I knew about real estate, or I was told about real estate, was that at some point you should buy your own house.
Yeah.
So my story was, I was taught, you go to school, you go to university, you go to grad school, and you become, to be successful, you're going to become a doctor, a lawyer, professor, engineer, like that. Those are your options. Choose one. And so I chose law. I became a lawyer.
Yeah.
I guess I'm not as into the math and sciences, so I'll be a lawyer. Like that was basically how the thinking went. It wasn't that thought out, but it was like, okay, of those choices, that's the one I picked.
Yeah.
And I went to law school, and then I was in started working in a big law firm. Hated my life, was totally miserable, but that's a whole other conversation. But after a few years of working as a lawyer, I was like, okay, well, I guess it's time to buy that house. Because that's the plan. Like you get that job, you work until you're 65, 70, you get a gold watch, you retire, you play golf, you die, but at some point you like buy a house and, you have those things. So that's the story I was taught. And so this was 2005, and I live in Los Angeles, which is a super expensive market. And even back in 2005, a starter home in a semi-decent neighborhood, not a mansion in Bel Air or Beverly Hills, but just like, a neighborhood where you weren't likely to have a drive-by shooting kind of thing.
Yeah.
Starter homes were upwards of $600,000, $700,000.
Yeah.
So I was making over $100,000 as a lawyer, but it was a little tough to get in by myself. So I didn't really know house hacking was a thing, but I had a friend who suggested that we buy a duplex together. And the original idea was that he would live on one side and I would live on the other. And I could afford half a house. So I was like, yeah, totally, let's do that.
Yeah.
So we started looking, and then we ended up falling in love with this old craftsman house that had a larger downstairs unit, and on the upstairs was this 2-bedroom. And then there was also a converted garage in the back. That was another 1-bedroom.
Mm-hmm.
And we each ended up taking a bedroom in the downstairs, and we rented out our upstairs and we rented our back house. And I was like, oh, snap, these people are paying our mortgage. Like, this is amazing, right?
Yeah, yeah.
I wasn't thinking about it as a way to replace my income, like passive income. I just, like, that wasn't part of what I was taught. Like, I always just thought you trade time for money.
Yeah.
But this was just it felt like, oh, that's a kind of happy coincidence. And so I just became a landlord kind of by accident. And then when I met my husband, he had a duplex, and we got a single family house together. And then 2008 happened. So I got married in 2007. 2008, I actually was pregnant, and 5 months pregnant. My boss calls me into his office, I thought I was going to get a bonus because I'd been working so hard. I've been working like till midnight most nights. It was really like really long hours.
Yeah.
And instead I get fired.
Oh my God.
Yeah. I was
No.
like, what? It was literally like the
What?
week after I told him I was pregnant. I was just like, what?
Yeah.
So anyway, I get fired. I decide I'm gonna wait until after I give birth to look for another job and take a short maternity period. Then I'll find another job. We had some savings. So and then my daughter was born in late August of 2008. Like within a month after her birth, the markets, the economy, it was like free fall. It was a terrible time to find a new job.
Yeah.
There was like no jobs. It was my husband was a self-employed graphic designer. His business went down 90%. It was it was tough.
Yeah.
What saved us was having some real estate. And we
Yeah.
sold one of the duplexes, and then we started to flip houses. Um, Houses were on sale. We didn't realize how on sale they were, and we didn't know. We just bumbled and stumbled our way through it. It
Yeah.
was pretty easy to make money at that time because things were cheap, and you could like fix it up and sell it, and for a lot more. We made so many mistakes. If I had to do it again, I would do something really, really different. First, I would
Yeah.
buy like way more houses, and I would have kept
Yeah.
them. I wouldn't have flipped them.
Yeah.
But I know like what those HGTV shows
Mhm.
were like. That was real estate investing to me. Like
Yeah.
HGTV, flip flop, those kinds of things like flipping. That was all I knew. Even though I had like some buy and hold properties, I was like, oh, I'm going to invest in a flip. And so we were flipping and making money, and then we did that until about 2015. And at that point, houses weren't as on sale. Like hindsight being 2020, they were still like super on sale compared to where they are now. I'm like, maybe
Yeah.
I should have kept buying them. But at that time,
Yeah.
it felt like, oh man,
You wish you would have had a crystal ball.
I know. It's like you kept thinking like eventually the cycle will turn and then prices will come down and whatever. But
Yeah.
I was just like, wow, it's really expensive. And then flipping is a job. So this is very active. Like you buy it, you fix it up, you sell it, knock on wood. We always sold for profit, but
Yeah.
then you had to start over again. And I went, it'd be nice to just have like buy and hold properties where we're just putting in tenants, we're making money, we don't have to keep doing this.
Yeah.
And so I started looking for a buy and hold properties in LA. And we were looking for fourplex because at that time that was the largest thing I could think of. Fourplex were a big deal. And here, this is in back like 2015, fourplexes were like upwards of $2 million. So they were, and there was zero cash flow. They made no sense. They were super expensive, and there was like no money. Like you didn't cash flow. It was a complete 100% appreciation game.
Yeah.
Right. So I was like, it was really frustrating. And at that point, I was in this mastermind, and one of the guys in my mastermind, I was telling him like, God, telling him about the flipping and how that was kind of frustrating, and then looking for this fourplex. And he says, I have this friend who's his name's Robert Helms. He's the host of the Real Estate Guys radio podcast. And he goes, he's done like hundreds of millions of dollars worth of real estate. He's going to be in LA tomorrow night. You want to come for dinner? You want to talk to him? I was like, yeah, sure. Yeah, like I always wanted to talk to people who are doing what I want to do well. So I was like, yeah, heck yeah. So the next night, I remember it's like October 15th, 2015, and we were at dinner, and Robert was asking me about what was going on. I was telling him about the flipping and about looking for this fourplex. And he said two things that totally blew my mind and shifted everything. So the first thing he said was, LA is a really tough market. I always say, live where you want to live, invest where the numbers make sense. And I went, oh, until he said that, I just assumed you had to invest where you lived, like where you could drive to your property, touch it, self-manage it. It hadn't occurred to me that I could invest outside of that. And so that literally opened up the whole world to me. I was like, oh my, wow. LA is not the easiest place to invest. It's hella expensive. It's hella tenant friendly. It's great if you're a tenant, not very great when you're a landlord. The rent control, like it's not easy. And I just thought I lived here, so that's where I had to invest. So when he said that, I was like, okay, all right, that's good to know. And then the next thing he said was, and you can buy this fourplex by yourself, but you're limited to your own capital and credit. He said, alternatively, you could bring a group of investors together and you could buy a 100 or 200 unit apartment building. And I was like, I think my brain exploded. Like,
wow.
what? Like, that's a thing? Like, people, like, what? Like, you can do that?
Yeah.
Until he said that, I just assumed you had to be a billionaire to do that.
That's amazing.
Especially when I was thinking in LA prices, right? Like if a fourplex is 2 million, like 100, 200, I was like, what? Like, that's
yeah.
And so he started telling me about that. And I was like, oh, I want, and then I was like, I want to do that. I was like, I want to do like that. Like his whole body, like, yeah, show me how to do that. And so, and he was teaching that, and I was like, oh my gosh, I'm like, I'm gonna be your groupie. I'm gonna learn. And he laughed. He thought I was joking, but I totally like followed him around the world learning from him.
Yeah.
And I was like, no. And I went home. I told my husband that night. I was like, oh my gosh, there's this thing. It's called syndication. You bring groups of investors. I was like, let's do this. And so we signed up for a syndication seminar. It was in January of 2016. And so at the beginning of 2016, we had 2 doors. At the end of 2016, we had 1,012 doors by having had like just doing this model of syndication. So we syndicated the 109 unit mobile home park. We did, so we actively syndicated 3 things and we passively syndicated 2. So we passively invested. So we passively invested and learned a lot. So we did probably about 514 of the units were passive, and the balance, we did 2 apartment buildings too in Albuquerque, New Mexico. And it was, I was like, this is incredible.
Yeah.
And we probably spent less than we would have on that one fourplex in LA, right?
Yeah. With your own credit, your own money from your bank account. Yeah.
I mean, we put in some of our own money, of course, but it definitely wasn't all our money.
Yeah.
I think we acquired, on the GP side, we got, over $10 million worth of real estate. And, just like by bringing groups of investors together.
Yeah.
And it was great. And I noticed, as I was on this journey, I was like, this is awesome. Like, and this is how wealth is created, right? And I remember speaking to a friend at the time about this, like syndication, of a law school friend of mine. And he was like, oh yeah, I've been doing that. This other friend of ours from law school, he's been doing that. And I've been investing in these deals. I've made tons of money. And I was like, well, it would have been nice if you told me about them. I didn't know about these deals.
Yeah.
I was like, nobody mentioned this to me.
Yeah.
And I would have appreciated finding out, because I put a lot of money into these in the flips. And like I could have been investing and making pretty much as much money like passively, right? And I was like, but I was working, and and I was like, oh, it would be good to hear about this. And as I went to these different syndication seminars, I realized, I was like, oh, I went to one, and I was, the next day I was in the hotel gym, and I was just sort of thinking about it. And that room, and there were 120 people had been there. And maybe 8 were women. There were no women in that room. There were so few women. I think 2 were working there in the back. So there were just so few women. And before, in between being a lawyer and while I was, doing this real estate, I'd been an abundance coach for women. So I was working with women around abundance and money. And then it came to me, it's like, bring all that together, like bring the women into this room, like bring that abundance coach, like bring them in, and show them how to do this, because real estate, you don't have to it's like that mommy like is when you're working, for women, working like a conventional job does not make us win. So
Yeah.
we get paid less per hour.
Yeah.
Um, and also we're the ones that tend to take time off the career path to go raise kids or take care of aging family members. So that like that time we lose seniority,
Yeah.
we lose earning years. And then when we come back, when people get fired, we're like, we don't have as much seniority, we get fired first, so it's like, it's a taking it's hard, like
Yeah.
financially. That's
Yeah.
why there's a big like gender wealth gap.
That's it.
But with real estate, like market rent is market rent, even if the landlord's a woman or a man or a color or whatever,
Yeah.
right? Like that's market rent. You get
Yeah.
that paid, and you get that whether you're taking care of kids or you're working another job or you're on vacation, you're sleeping, right? Like that money comes in month after month. And
Yeah.
and that is this way of like bridging the wealth gap. So, it came as this divine download to bring women into this room and this mission to help 1 million women create financial freedom through real estate investing. And it's almost like, this is your mission. Should you choose to accept it?
Yeah.
Um,
That was a gift
and
from God.
so, yeah, so that's what I've been about since 2016. And it's been quite a ride.
That's amazing. So in 2016, you had already gotten around 1,000 units, right? From GP and LP investing. And then you started your own community teaching other women to invest in real estate syndications or do them
Not
just
just
like
syndications.
not just
Yeah.
syndications.
No, program is kind of asset class agnostic. So real estate
Uh,
investing is
yeah.
not one size fits all.
Yeah.
So it's really about like the foundational principles of real estate investing and helping you come to your own plan for what makes sense
Yeah.
for you, given where what your vision is, what your skill sets are, what your resources are, how you want to play in this game, and then creating a plan and a path that matches and marries all of those things.
That's amazing. Cool. And so, wow. So that's 2016. And then you after that, then you kept, teaching people, and also did you kept building your portfolio?
Mm-hmm.
And
Yeah.
then so just for the people out there, like, you know, I would say that everybody says like I have 1,000 units, I have, this many units, 800, 2,000, whatever. What is an actual number, like a tangible net number that someone can look forward to? Like, because 1,000 units means you have 1,000 people paying you rent, but you don't own all of it if you, of course,
No.
syndicated it. So
Yeah.
in terms of like real, like, what is the kind of net that someone would gain?
Yeah. So it kind of, so as a passive investor, you want to look into like, what's my return on my money, right?
Yeah,
So because as a passive investor, you're putting in your money and your money is going to go off and come back with friends. All
yeah,
right. So, and there's a certain amount that comes in as monthly cash flow. And then there's a certain amount that will come in at the end when you exit through equity. But
yeah,
cumulatively, returns tend to be around 50, like historically they've been about 15 to 20%
yeah,
per year. So if you put in 100,000, you're getting 20% a year. Like at the end of 5 years, your 100,000 will be doubled.
yeah,
Right? That's passive, and you don't have to find the property, you don't have to manage it, you don't have to deal with the tenants, toilets, termites. Like your money's gone off and it's come back with friends. Now, as the active syndicator,
yeah,
because you are doing the work, you get acquisition fees. You get so you'll get a portion of the money when you put the deal together.
hmm
You'll get asset management fees, so
hmm
a percentage of kind of top of the line off of the income, and you own and you get a portion of the equity. You have a piece of the equity for your efforts. So
yeah,
usually as an active investor, you're usually getting about like 3x what the passives are getting,
yeah,
um, between, at the end of the day, but you're doing the work. So
Gotcha.
that's what you can,
Yeah. So
it'll vary, but
so you get the 3x, and you get the 3x on money that you raised, right?
No, I mean,
Or you put your own money.
you're putting in your own money too. I mean,
Yeah.
you don't have to. So there are some deals where it's just all other investors' money, and it's just then it's like infinite return, but it's off of your sweat equity solely.
Yeah.
We we try to have money in each deal, so we have skin in the game and everything.
Yeah. Okay. That makes sense. Okay.
Yeah.
Got it. Cool. And so how many people do you have now in your community?
We have about I think about 34,000 women on our list.
Yeah.
So
That's amazing. That's amazing. And this community is hosted on Facebook groups as well.
We have a Facebook group and Facebook page, but mostly it's like the email community.
The email community. Got it. Okay,
Yeah.
that's beautiful. And so tell us, you continue doing the investing in syndications and helping other people get a return on their money, right? This has helps them create financial freedom, plus helps them set up for retirement.
Yeah.
And so these people is it accredited investors or is it non-accredited? What are the requirements to be someone who can invest in a deal like this?
That's a great question. So we do a lot of deals where we take non-accredited investors. There are a few that it's accredited only. And just for, anybody who's listening who's like, what is accredited?
Yeah.
I didn't take that test. I don't know, like sometimes like you don't have to take a test, you don't have to have a course.
Yeah.
You don't have to there's nothing like that. It's usually it's based off of your income or your net worth. So if you have if you have an income of $200,000 or more as an individual, or $300,000 or more as a married couple, and you've had that income for at least 2 years with a reasonable expectation that you will have that same or more income in the coming year, then you are accredited. The other alternative way to be accredited is if you have a net worth of $1 million or more, not including your primary residence.
Yeah.
So that's what an accredited investor is.
Yeah.
And so some certain deals are just for accredited investors, and others, if you are sophisticated enough to understand the deal and you have a pre-existing relationship with the syndicator, then you can get into that deal. So for those of you who are like, I'd love to be on that list and find out, so you have to, like, for us, like if you go to my website, reigoddesses.com, and you go into Investor Club, you'd fill out the form, you'd get into a conversation with me. I'd find out about you and what you're looking for, and just to get to know you. And then once that happens, then you're on the list, and then we have a pre-existing relationship. You're open to the opportunities that are for non-accredited investors. If you're accredited, and those are for accredited investors only, that relationship isn't necessary. But to find out about most of these types of deals, you need to get on a list for syndicators, and the Investor Club is how you do it for us.
Got it. That's really cool. And so I want to talk about a little bit about what it takes. And so I would say that there's character traits, there's beliefs, and then there's skills. And so let's talk about some character traits of a person like yourself, or what you look for in a partner who invests with you, that would make it so that the deal is successful and all of this that you're doing, is successful.
Yeah. I left this question, and I look at, I call the 3 C's when I'm looking at any potential partner or team member.
Yeah.
But so the first C has to do with like the character, and this is an order of importance. So like, what's a
Yeah.
person like? What's their character like? So like high integrity,
Mm-hmm.
honest,
Mm-hmm.
and just like really shows up, does what they say they'll do when they say they'll do it, is kind and respectful, and then
Mm-hmm.
also like so like that as a person, that's very important to me, like who they are and how they show up.
Yeah.
I think, and that's just like who I look for when I partner with someone, in terms of their characteristics, and then I also look for people who are a like well, then we'll go to the next one. So then the next one, and then just in terms of like syndication in general, I think characteristics that are important are like persistence, and grit and determination, willingness to do the work, but just like real stick to itiveness, that's
Yeah.
like they're committing, they show up, and
Yeah.
they continue to show up, and they communicate well, and like they're very open and honest, and like very communicative. So that's as a character. The next C is commitment. So I look for somebody's commitment and their commitment to the project. So how committed? So somebody who says, "Yeah, I'm going to do that," but then they're doing like 10 other things, and they're showing up. Like that's no good.
Yeah.
And whether you have a contractor does the same thing, or anybody who's like they're not very committed, like they
Mm-hmm.
need to be committed to that particular project, but
Yeah.
also a commitment to your shared vision, and like the mission, vision, and values. So one of my values
Mm-hmm.
is my value is I want to have relationships for life. So it's not about being
Yeah.
transactional, like let me get the most out of this deal, and it's like I want us to want to work together forever and ever and ever, right? I want us
Yeah.
to feel like family. I want us to be friends. So like when I'm thinking relationships for life, it's like I'm willing to give so that we can keep working. But obviously that's not going to work very well if I'm with somebody who's transactional. Like I don't want to be taken advantage of. So they
Yeah.
need to have that same sort of value that we're both looking to like want to keep working together long term.
Yeah.
I want us to retire together. Like, we're gonna like long in the future, we'll have made
Yeah.
billions together. We're gonna be like long term thinking, right? For life. And then the next is I want to invest where we can leave a property in a community better than we found it.
Yeah.
So it's not about being a slumlord. It's not about getting every dollar out of a deal. It's like, how can we make this better for the people who live and work in our properties, that like have this like ripple effect of goodness, like that's like very win-win for everybody. So I want people who share that value,
Yeah.
and have that same commitment. So
Mm-hmm.
so that's the next C, commitment. And then the last is capacity. So
Mm-hmm.
that's like their skill set. Like what's the skill
Huh.
set? And then it kind of depends, like what do I need them for in
Mm-hmm.
this project? So they have that skill set. I like people that have complementary skill sets to me. If they're exactly the same as me, like one of us is redundant. So they, I tend to be a big picture person. I'm more like relational. I'm
Yeah.
not the detail person. I'm not as my husband's more that.
Yeah.
He's like more the one that's like doing all the due diligence and getting into the numbers.
Yeah.
I'm not. I'm like I design things. I do, so that's more where I like that's my zone of genius.
Yeah.
So I need like complementary, but also I learned that from a mentor, like work with the best. They
Yeah.
won't cost you money. They'll make you money. So
Uh-huh.
when I'm looking at capacity, but capacity can be taught, like skill sets can be taught, but I'd rather work with like the person who's like so good at that. They teach me, right? They know all the shortcuts and all the people, and the best tend to work with the like A players tend to work with other A players.
Yeah.
And so like once you like connect with that, like your whole they have that person who's amazing, and then they have that person who's amazing, and then your whole team is like that.
Yeah.
So that's what I look for in terms of like capacity.
Yeah.
Like who's the best at doing this particular thing.
Yeah, that's amazing. So character, commitment, and it is
Capacity.
capacity. Got
Three
it.
C's.
That's
Yeah.
amazing. I love how the three C's work together. It's easy to memorize. It's great.
Yeah. And like I remember somebody listening, they were like, oh, you could look for that for a love partner or whatever. Like I'm like any partnership, any team member, any employee, like the three C's, it works.
Yeah,
Yeah.
that's beautiful. And so
And also you have to do it yourself, right? Like you
of
need
course
to be
you
a
got to be that
character, you need to
person
have the
to
commitment and
attract the
yeah.
right. Yeah.
Yeah. So you gotta be the person that you want as well.
Yeah, that's amazing. Yeah, I think what you look for, you find, or what you are, you attract. So that's
Yeah.
great. And when it comes to beliefs, like let's say someone wants to be in your position,
Mhm.
they want to syndicate deals. Um, what kind of beliefs do they need to break? Because I know that a lot of people are in single families, and they
Yeah.
do that all their life. So
Yeah.
what would
So
you say?
what would I say for in terms of beliefs? So
Yeah.
the first is that no, it's possible. So
Hmm.
until I had heard about this, from Robert Helms that one night, I didn't even know that was a thing. So but the first thing is to realize it's a thing and
Yeah.
that like, normal, ordinary people can do it. And if, all sorts of people are doing it, so can you. So that's the first belief. Like it's possible, like anything. It's like you need to know it's possible. Um, success is there and you can do it. Like you need to know that you believe that it's possible for you to do it. And you can do it. So it may require you to get some education. It may require you to get some support. It may require you to partner with other people that have that experience. So you may not like go out and do it because I didn't do any of those deals by like 2016. None of those I did alone.
Yeah.
Right. So I had with each of those things, I had partners that had more experience than me. And I was able to get in the door because I was leapfrogging off of their experience. And because, the first, gosh, I totally lucked out. Because we got into it and I mentioned to our next door neighbor that we wanted to do this. And she said, oh, I didn't realize that she was doing that. She was working for this fund, this like a big, huge fund. And at that point, she'd done almost $1 billion worth of deals.
Wow.
But she was a VP of this fund, but she hadn't done any on her own, like on her own account. She was doing
Yeah.
it for this fund, and she
Yeah.
wanted to start doing on her own account, not like big boy deals like they were doing.
Yeah.
But she was like, if you she's like, I have no time. They were working her like a manimal. She was working so hard,
Yeah.
so many crazy hours. But I was like, well, we have time. We'll look for things, and she could, like do due diligence in her sleep. She could just look at things and see. Like, we'll do all this legwork and we'll partner together. So we
Yeah.
created this. Our business is called Vineyard Investment Partners, and people are always
Yeah.
like, "Do you buy vineyards?" I'm like, "No, but we were neighbors on Vineyard Avenue." So we were next door to
Oh, that's
Indigo, and then became
cool.
like VIP Vineyard Investment. So anyway,
Yeah.
we started with her. In the end, she was like too busy for us ever to like partner with her.
Yeah.
But we had our team had
Yeah.
almost $1 billion worth of experience. Of
Yeah.
course, like
Yeah.
most of that was borrowed from
Yeah.
like
Yeah.
from her, but like as a team, we look really dang good.
Yeah. Yeah.
So
It- you
you
could
don't have
say
to
it.
have any of it for yourself. You just have to like team up with the people who have it, and then you
Yeah.
can, yeah, make it work.
And so so you found partners and you just scaled up.
Mhm.
And so at the highest, do you still have some deals that are going on right now?
Yeah.
Like at the high, like how many doors do you have now? Like since 2016?
How many doors do we have now? My gosh, I'm always like
Or
we're about this. We're like under contract to sell like that first mobile home park.
yeah.
But I think at the moment we're probably like around 900. So I think at like our peak it was like 1,300 something, and now we're like probably around 900 doors.
That's amazing. So these are doors that you syndicated yourself. and then you
Yeah,
have
so
the
I'm on the like GP. Yeah.
nice, cool. And so, I mean, that's amazing. And so, tell us, what are you doing now? Is it different from a multifamily investing or doors like mobile home parks? Um,
Yeah,
could, could you go into that?
sure. So most of what we're doing right now is we are doing these sale leaseback industrial.
Mm,
So to explain what that is,
fancy term.
I know it's like people are like, "What? You lost me at sale?"
Yeah.
Yeah. So first of all, industrial properties are any buildings where industry happens. So it could be factories, it could be warehouses, it could be storage, um, uh, like data centers, just where industry takes place, right? As opposed to retail or office. Right? I got into industrial in 2019.
Hmm.
At the end of 2018, so in 2016, we bought 2 apartment buildings in Albuquerque, New Mexico. Those were not the easiest buildings. I have to say that one in particular, like on the outside, everything seemed really good, but just FYI, don't buy in a place that was called the war zone. Not
Mm,
gonna work out
do
well for you.
not.
So
And
it
so
like
war zones for people that are listening. So there's
yeah,
different like there's different areas, and they grade
yes,
them differently. So an A class is like, the best, city type of building you can find. A B class is a little bit older. Then goes the C class. This is like where you maybe don't want to live, but like it's okay though. And then D class is like when you really don't want to live in
it's
it,
scary.
and it's not good, just
So we thought it was C class,
you
and there
thought.
was like a brand new Starbucks across the street, as well
Yeah.
as like a new Planet Fitness, and it was like signs that it was turning around. There was an apartment building that had been a block away that had been turned around, and the rents were pretty high. So
Yeah.
it looked like the neighborhood was turning,
Yeah. It's
but this
coming up.
particular building, it was just hard. I
Yeah.
mean, there were drive-bys, there were like gun got pulled on our property manager. We had
Wow.
that's a lot.
That's
Every week we'd call the property manager, kind of like
oh
grimacing, like, "Oh my god,
no.
what are we gonna hear about next?" There was fires. I mean, it was a lot. It was
Yeah.
intense. And the other one was in a better area, but still, it was just like constantly something. But we ended up selling. There was like a 1031 exchange buy. Like we were like, oh god, what are we gonna do about, like, we need to get rid of these, and we thought we're gonna have to do a lot of heavy lifting to fix it up. So anyway, our property manager like, well, we have this other buyer who's interested in your buildings, and so we gave this like crazy price, which was a 4 cap. It was a 4 cap on
What
this, like,
in a war zone. Wow.
in a war zone in Albuquerque, New Mexico.
What was the cab you bought it at?
Huh? Like, I think that one was like 10 cap.
You bought it at a 10 cap and you sold
Yeah,
it at a 4 cap? Wow. Oh my God. Yo,
it was awesome.
you scored.
Anyway, it was
That's amazing.
like
And that was how many years later?
2 years later.
2 years. Oh, it's
Yeah,
phenomenal.
yeah, it was great. As a seller, it was great. As a
Yeah.
buyer, it scared the poop out of me.
Yeah, of course.
Like, I
Trauma.
was like, wait, people are willing to pay that much for that asset? I was like, I don't want to be competing with that.
Yeah.
Maybe I want to look at other asset classes, because multifamily is a little insane right now. And this
Yeah.
was still like 2018. There was a lot more runway after that, but I was
Yeah.
just like, and we've continued to buy, but I was just way more careful
Yeah.
about buying multifamily. The numbers really, really, really had to work.
Yeah.
But at the time, I was just like, what else is out there? Because, like, I don't want to go where the herds are going, and the herds are obviously in multifamily, and they're willing to pay insane money for things.
Yeah.
And so, somebody came to me about an industrial project. It was like a few industrial parks in Houston, and I was like, industrial? I don't know much about industrial. Tell me about industrial. And it's like, looking into it, it's like, oh, okay. So retail was hurting, and office was hurting, but as things were going more online,
Mhm.
online retailers need industrial. So
Mhm.
online retailers, they need places to store, they need distribution centers, they need like R&D. And so it was like industrial was there was more and more demand for industrial, but there wasn't the feeding frenzy for
Yeah.
industrial that I was seeing in the residential side. So I was like, okay, let's, yeah, I'm intrigued, and I like
Yeah.
the returns and the triple net leases. So triple net, like, for people who don't know, a triple net tenant, not only do they pay you rent, they pay all of the property taxes, they pay all of the insurance, and they pay all the maintenance. So if there's an issue with the toilets, they fix the toilets. If there are issues with the roof, they'll fix the roof. They'll fix, it's like, yeah, I like it. And
Heaven.
you have these
That is
tenants that are
in real
businesses.
estate, it's what you call mailbox money.
Complete mailbox money. And then since we started doing sale lease back, which like at least like at the first one, we had a variety of tenants, and tenants would leave, and then you'd have to do improvements and like fix things up, and and it's not the easiest thing to put in new tenants in an industrial place. It's not the same thing as like filling a 2-bedroom apartment in Atlanta. But we started doing these sale leasebacks, and we partnered with somebody and sale leasebacks are when there's a company that has a property, they're using it, it's owner occupied, they want to sell the property, usually so they can get equity out of they want to access the equity, put it back in their business, but they still want to use the property, so they sell it and then they lease it back. And they go from being the owner to a tenant. There are also tax benefits for them to rent versus owning. It doesn't matter. But from our point of view, we put them in these usually 20-year leases, long-term leases, built-in rent increases. So usually rent goes up 2% a year. And we know exactly what our income's going to be. And we know exactly what our expenses are going to be, because our expenses are debt service. Like we pay on the loan, and then everything else the tenant pays. So all of this, like, now, like with inflation and all that, like none of that affects us. So we don't have to, we have a fixed rate loan. We like, if the utility prices go up, it's like, sorry, tenants, like that's on, like all that's on them.
Yeah. Like we already set
we have to make sure that we do a lot of due diligence on the tenants, on the companies, to make sure they're very, very solid. And so usually they're 8-9-figure companies. They're I think the youngest one we've done was like a 17-year-old company. I mean, they tend to be these like very solid 20, 30, 40-year-old like mom, like they're not necessarily the ones you'll have heard of, but a dog food company or a company that does white label frozen pies or organic baby food, or they do the touch screens for cars, or it's like random industries, but the same basic principle. And we'll hold on to them for about 4 to 6 years, and then we sell them to an institutional buyer. So for our passives, they are getting usually like in the high teens to like low 20s in terms of like annualized returns. That's about. They're really, and they're just, I mean, everything has risk, but they're very low. I don't think we've had a single, like we haven't had a tenant default. So yeah, it's just,
it's
just
pretty
great.
awesome.
We don't have to touch the properties unless there's no fixing them up, because they're already set for the tenants in there. Like
there it is.
Yeah. So there's nothing to do.
Amazing. So that's really cool. And I'm very happy to hear that your passive investors are getting in the high teens, because that's obviously a really good return, and so what you do is you buy them right? Like what you buy them at the right price, and then you lease them at a profit, and then you just sit back and just collect rent. That's as simple as it gets. And there is no management, there is no toilets. You don't have to worry about the property taxes and the insurance. Insurance it depends on where you buy, but it can get very, very expensive. So that's very interesting. Amazing. So
I love them.
And so you see yourself continuing to do this in the future? Like, is this what you're going to be sticking to?
I mean, we do multifamily still. We will do other asset classes if the deal makes sense. But we've just been really loving these industrials.
Yeah, I mean, it sounds
And
great.
it did industrials like top performing asset class during COVID, since all these like were essential businesses. So it's been a great ride. And right now, they're actually gotten cheaper. So, but the rents are the same or getting higher. So we're actually buying them even better now.
Mm,
So
wow, that's amazing. The price is going lower, and then the rents are still staying where they're at. So
yeah,
and there's so much demand for industrial because there's e-commerce stores popping up everywhere, and Amazon's taking over. There's a lot of retailers that have been hurting. Radio Shack went out of business. You know, a lot of these stories, right? So that's very important. So Monique, let's close with I want to know your vision. Like moving forward, I'm sure you have a vision for your company and for your community. I just want to share that with the world so that if they feel called, they go visit you at your social media platforms and they invest with you, and then you can just call out your tribe.
yeah.
Yeah.
So thank you for that question. I love that. My vision is ultimately to help 1 million women create financial freedom through real estate investing. And so,
Yeah.
and for me, helping women is kind of a shortcut to help everybody, because when women have something good, they'll share it with their men and their kids and their neighbors and their mamas and so it's like
Yeah.
I get to help everyone
The
through
benefit
doing
spread.
that. So this vision is seeing like all of these financially free women. I see like this like huge. I'm like it's like huge stage and all these like super excited women. That so I that's my vision. I see that. And yeah, I'm trying to reach a larger platform. Right now I'm working on a TV show, so hopefully it's part of the
Wow.
vision too.
That's cool.
Having a show where we can teach women and others how to invest, and then so and helping women, regardless of whether or not they think they have the money or the time or whatever, just like empowering anyone who wants to invest to get in the game.
That's amazing.
Yeah.
I love that vision. So thank you, Monique. If they want to visit you, what's your website? What's your social media handles?
Yeah. So the
Yes.
website is reigoddesses.com. We're at REI Goddesses on Instagram,
Mhm.
and you can find us at Real Estate Investor Goddesses on Facebook.
Amazing. Okay, beautiful. All right. Well, thank you guys so much for tuning in. And this has been another episode with the Real Estate Investors Group. And I'm happy that we had Monique on today. And hopefully she come on in the future as things progress and we have more guests. So all right. So have a good day, guys.